So in talking about how things are actually going today, we've got another question here. Aaron has got a follow-up question, and everyone watching can also ask a question. To do that, you send an email to live@duke.edu. You can tweet your question with the tag Duke Live or post it on the Duke University Facebook page. So Aaron brings up the example of Dubai. She said, where does it fit in? There's the tallest building in the world is in Dubai, and yet this emirate almost went into bankruptcy recently.
Yes, so the simple story about Dubai is that it spent beyond its means under the assumption that its property was becoming more and more valuable, and that demand for its properties would grow indefinitely. When the global crisis hit, Dubai was affected as well, and having borrowed a great deal, it finds itself now facing difficulties paying it. It's not a unique story. Greece is facing the same problem. In our own country, California is facing a similar problem.
Right, but now Dubai, isn't it at least ostensibly operating under this Islamic finance rubric? I mean, how can you be borrowing and be buried in debt, but not
well,
interest?
some of its borrowing was at interest. So that part of it is easy to understand, because you have borrowed a certain amount of money, promising to pay 5%, 6% a year, and if your economy is not growing, if you've had a property bubble and property values are falling, it's easy to see how you would have difficulty paying back that debt. But as you point out, Dubai is also a center for Islamic finance, and some of Dubai's own borrowing was Islamic borrowing.
Okay.
Now, what is the difference?
Yes.
Well, in principle, Dubai was issuing not bonds, which are interest-based, but what are called sukuk,
What's that?
Islamic bonds. And these work on a different basis. Dubai transfers, as the borrower, transfers ownership of an asset in Dubai to, let us say, Barclays Bank, the lender. And immediately rents back that property from Barclays Bank and pays Barclays Bank a rent, not an interest payment, but every year it pays a rent. And at the end of the contract period, it pays back what it borrowed from Barclays Bank and gets back the asset. Now, the rent is equivalent to interest.
Interest, right, okay.
And it's widely understood by both sides that, in fact, the rent is not going to change. Now, under the principles of Islamic finance, if the borrower, or when the borrower runs into difficulty paying back, the two sides are supposed to share the burden. But that's not happening. If Dubai were actually abiding by Islamic principles, then some of its burden, some of its misfortune would be shared by its borrowers. So this is part of the story. A third part of the story is that people don't want to lend to a country where property values are falling if the collateral is going to be property in that country. So they were quite willing to lend to Dubai and accept property as collateral, at least legally.
Right.
Even if the understanding was different. They were quite willing to do that as long as property values were rising. But with falling property values, they're not as willing, unless the interest rate is higher. And of course, that means a greater financial burden for Dubai, that is greatly indebted and that needs to service the debt. This is, again, the problem that Greece is facing today. given the possibility of a bankruptcy, people are willing to lend to Greece only at higher interest rates.
Right, so it sounds like in there you're saying that these Islamic bonds aren't that Islamic after all. I mean, there's a Reuters headline here from this week, Islamic finance industry launches derivative standard. I mean, an Islamic derivative. What's your critique of this idea that you have an Islamic bond and an Islamic derivative, but then when Dubai gets in trouble, then suddenly the creditors want their money, same with any other bond?
Well, there are many of the thinkers behind Islamic banking, many of the people who have been making the rules, are themselves not happy the way the industry is actually operating.
Okay.
They would like to see genuine profit and loss sharing. They would like to see a genuine sharing of risks, and that is not happening. And one reason it's not happening is that you cannot find as many willing lenders if they're going to have to take bigger risks in a part of the world that is politically not very stable. And it is cheaper to borrow if you promise a fixed rate. So
Right.
it's not convenient to do Islamic banking, and if you enforce the rules of Islamic banking, there will be far less borrowing.